On the monthly chart, the VIX Volatility Index, I have taken us all the way back to 2008. So again, the VIX moves in the direction opposite the broad market because it's a measure of fear. So when the VIX is rising, fear is rising and stock prices are falling. Now look at the shape of this candle, okay? You can see it has a green body, so closed higher than it opened. It has a flat bottom and has a very long upper shadow. So that is representative of what happened over the course of the entire month of October 2008, not just on the times and days where the market was really sinking. Now, why am I showing you this while we're in 2024? Well, let's move forward a bit to the pandemic. So when the pandemic unfolded, we had another spike, and you can see that right here. Now, this one didn't have a flat bottom, okay? The open was in the middle of the range. But again, over the course of the month, March of 2020, right, we all remember that. The VIX sailed up higher, touched the 2008 high. That was at 89.53, and we got to 60.59, so super close. And then for the month, closed back lower. And if you were trading at that time, you may recall that the March 2020 low was an amazing opportunity to be buying up stocks for the next several years. Now, check out my favorite momentum indicator, the RSI power zones down below. Look at how they have corresponding peaks as well. So the RSI power zones are really useful on the VIX. You just have to remember that bull support and bear support on the VIX application of RSI power zones needs to be thought of differently in your head, right? You got to flip it and reverse it. So why, again, am I bringing up all this history? Because look at where we are today and now. Now, the month is not over. It's only August 5th, Monday. But look at the monthly candle forming so far for August 2024. We are an hour and 20 minutes from the close, but check it out. It's this very similar extreme move, like kind of terrifying, especially with everything that actually happened over the weekend, overnight sessions, right? But look at the chart, right? It's going to take all that data and put into one. So now let's take this down. And I'm going to do something I hardly ever do. I'm going to take us down to an intraday time frame and show key levels, all right? So these will help you monitor what's going to happen in the VIX in the coming days, hopefully. So let's take this exact same chart and go to a weekly. Now, again, this bar isn't done because this is a week, but you can see that it wiped out all these recent levels and is starting to pull back. So on a weekly perspective on the lower levels that might stop movement down in the VIX, 2136, the old top, quote unquote, from week ending April 19th is one to watch, as is the high from last week. Yes, you can take individual bar highs and lows and apply them as support and resistance so long as you are taking them off a completed bar and you know how to translate them in the lower time frames. So now let's take this down to a daily. So I'm going to still keep those two levels that I marked, and now I'm going to get more granular. So again, look at this massive daily candle. Again, it's not finished. Okay, I'm making this video at 2:40 p.m. Eastern. So by the time you see it, there's still probably be some time left till the market close. But my point is that this giant range day, this is not a normal occurrence, and it would take a lot of fear to build up again to really push it up again. So could that happen? Absolutely. But let's again take what other data we can pull from this chart. So if you look at the daily chart of the VIX starting from the early April or early July lows, I should say, the most recent higher price low is here from July 31st at 1571. The high of that bar is also important. This is something I teach in my 4 zones RSI coverage system, my favorite way of identifying price support and resistance. And I'll add in that this high of this old doji here. So you can see we're starting to have multiple levels we can monitor, and now I'm going to go intraday. I will look at resistance as it applies on the VIX, but first I want to go take what I just did and look at it on a 60-minute chart of the VIX. Yes, going intraday. Again, I'm keeping every other level I showed you, but now I'm finding other ones that are close by. Okay, so we already know that this guy was important, the 2966. It was from the weekly chart, it was from the daily chart, and check it out. Look at how the VIX over the past couple hours has pulled back towards that 2966, but stabilized at 3092, and is attempting thus far to potentially go higher. Again, these are really extreme moves, guys, so trade with caution if you're going to trade. It's also perfectly fine to stay out of the way and let things settle out. Something else I want to do is add a trend line. All right, so drawing this trend line, shows me that there is a boundary of limitation to the downside in the VIX potentially along this orange line. Now, we're not anywhere near it now, but we may get there in the future. That's why I want to look at it. The other thing I'm seeing on the VIX is that while it went and pushed up into its sort of overbought category, which would mean that the underlying market's oversold, right? And it came down from there, it has now come back to an area where it's set up to resume higher again. This is where we're going to start getting intraday levels to the upside on the VIX. All right. So because I'm using these horizontal lines, you can't see the origin points, but you watched as I mapped them out from the weekly to the daily, the 60-minute, right? And you can re-watch that and then make your own little table of the key VIX levels accordingly. So now for the resistance levels, I will use a trend line tool so that you can see the origin point, okay? So I'm going to just make a blue line, extend to the right, and I'm going to start with the tippy top here because on the intraday, the high today on the VIX is absolutely a key level, 65.73. So I make this a straight line by just going over to data and just typing those values in. Once I do that, I'm just going to, for myself, put a label so that I can keep track of this, okay? Another important level is the middle of that entire range, okay? And now I'm going to take this and go intraday, 30 minutes. I was intraday, but I'm going even lower. That's not good enough. 15 minutes. The data's there, right? Why not use it? All right, now I've got some more insights. So now I got this high on the VIX at 43.99. And again, as I shift the time frames, the annotations and their little levels will move around a bit, but the lines will stay where I need them to, especially if I make sure they're precise like I'm doing right now. Let's go to a 3-minute chart of the VIX. I know, wild times here, okay? And now here's what all that looks like on a 3-minute chart. So what I'm seeing here is not great news for the broad market because the VIX seems to be recovering within the context of this move down on the VIX from 10:33 a.m. Eastern, which means the market had moved up, right? But the VIX is coming into some barriers that could be in its way, and the VIX is coming into its recent overbought territory, which could slow it down in terms of its current upside. The thing is that with the way that the action's unfolding, the amount of time it's taking rallying to the upside, it's not encouraging to me that the VIX is going to stop going up anytime soon. So now you have the levels, you have a look all the way down to a 3-minute chart. I never do this, all right? And I'm just giving you the lay of the land because these are wild times. And how I will revisit this and update for myself is I'm going to come back to this chart and look at it before I prep my E-mini S&P 500 futures analysis for tomorrow, which I share with S&PH Pro members. And again, when I look at it in the morning, I'll look at it again. That's right, I'll look at this on a 3-minute and I'll copy this out and save the higher time frames as well. So hopefully that helps you understand, look, yes, it's crazy stuff happening out there and the markets are really moving, but you can come back to the VIX as sort of a catch-all for just getting a sense of the fear gauges in the market to see if we're still, high in those fear levels and there's room to run up, which right now looks like there is, or if the fear levels have petered out and the market may get a little breather. So if you're new here, I'm Hema Reddy. Use price action, market timing, momentum. I've demonstrated many of those here today to boost my trading and that of my tribes. And if you found value in this video, please let me know. Hit the like button, hit subscribe if you haven't already, drop a comment down below and I will personally reply. Thanks and good luck out there. Catch you next time.